And for his perspective on the markets, we're now joined by Bill Strazzullo, partner and chief marketing strategist at Bell Curve Trading. Bill, thanks for joining us. Why are we seeing the sell-off? Is this the correction that many have been anticipating? Is it kicking in right now?
Yeah, Michelle, I mean, look, I think so far people are taking a glass half full approach in terms of what they've seen here. If you take a step back, you know, the S&P 500 was up almost 30% last year. And as you said, you know, we've given up maybe 3.5%, 4%. So a lot of people looking at that as a healthy correction, nothing unusual there. We have seen a spike in volatility, which is generally not a good thing for the markets. But if you look at what the VIX did today, topped out around 19.
Right.
You know, that's basically where these panics have faded in the past, high teens, low 20s. So, again, nothing unusual there. And I think the bulls take the most comfort in the fact that a lot of people were underinvested last year, missed a lot of the rally. So you should get buying on the way down. I think that's kind of the optimistic view.
So, Bill, firstly, the VIX for our viewers, that's the fear gauge. So that's kind of leveled off today. And in terms of the markets, you're saying this is now a buying opportunity. You'd jump back in?
Well, I think, Michelle, that's, as I said, the glass half full approach. I do think there are other issues here that people should be aware of. Number one, take a step back and look at what precipitated this. We had weak economic data coming out of China, you know, 7.7% GDP growth for 2013. That would be the envy of most countries. It was weaker than expected. That spilled over into the emerging markets, which then impacted our markets. That's not going to change anytime soon. Secondly,
now Bill, you mentioned China. Let's just focus on the China point very quickly, because you mentioned it, and analysts will say that this is in reaction to concerns about China's economy. The manufacturing data, granted, did disappoint slightly, but surely this concern could be a little overblown. I mean, 7.7 GDP, nothing to scoff at. It would certainly be envied by the U.S. and Europe.
Absolutely, no question about it, Michelle. But this is a game of relative comparisons, not really absolute numbers. That 7.7%, as you said, that would be, most countries would be thrilled to have that kind of GDP growth, but it was less than anticipated, and that had a direct spillover effect. A lot of emerging market economies feed China with commodities, and that in turn hit our market. And so, as I said, that kind of cause and effect. I don't see that turning around anytime, at least in the immediate future. So that's definitely a concern. Secondly, one of the things been glossed over with this whole chain of events that we've seen basically since last Thursday is our own earnings here in the U.S. If you go back a month or two ago, the expectations for Q4 earnings were 9–10%. Now you look at it, and we'll be lucky if we get 6%. So, and again, that's not necessarily bad, but when you think about the markets being at all-time highs, that's not the kind of economic data that's going to keep us at all-time highs and going higher. And then lastly, watch GDP growth on Thursday. Third quarter of last year, we had 4.1%. I think we're going to be back into the 3.2%. Again, nothing to panic about, but it's not the level of growth we need.
I want to focus on the Fed here. I want to focus on the Fed here. They are meeting on Tuesday. One of the concerns has been the Fed scaling back tapering. Do you think that the Fed may watch what's going on in the markets and reconsider the taper program?
They're not going to reconsider right now, Michelle. If they reconsider right now, that would be, in my eyes, that would be viewed as a panic move. They're going to go ahead with the tapering. If this sort of turmoil and volatility persists, and we're sitting here having this conversation, a month or 2 months from now, then I think they're going to rethink the tapering. One interesting thing when you look at this whole rally, which really goes back to March 2009, it's very much tied into the quantitative easing. So it's not surprising as the Fed is winding that back down that the markets are starting to roll over. So I do think from a bigger picture standpoint, it will be problematic, but the Fed is not going to pull back on the tapering now. In my opinion, that would be a major mistake.
Bill, very quickly, emerging markets have been hammered by the prospect of the Fed tapering. Explain that relationship. Why are they concerned about the Fed tapering?
Well, I mean, the Fed tapering, that there's less liquidity, less monetary stimulus. That slows down growth all over the world. These emerging market economies need that elevated levels of economic growth because they're the economies that fuel it. They're the ones that produce the raw materials that really are the engine or the fuel for stronger economic growth. So when you start to wind that back down, the expectation is growth is going to moderate, and all those emerging market economies that are kind of the ones providing the fuel for growth are going to feel the impact of that. So I'm not surprised that you've seen, a number of these emerging markets get hit hard.